Good morning, everybody. Chris here from Serene with my analysis this morning for Monday, the 29th of October 2018. Hi, everybody. Hope you had a fantastic weekend with family and friends. And we're now going into the last couple of days of this October before we head into November. Okay, so let's have a look and see if there's anything viable to trade these last couple of days of this October. Just reminded that there's important data this week. We have the all-important UK. Let me see here. We've got the bank rates. We have the UK's Bank England rate. We have the Bank of England's asset purchasing target stat. We have the Bank of England's inflation report, and we also have the Bank of England's Governor Carney speaking. This is all taking place on Thursday, the 1st of November. Okay, so the first day of the new month. This Thursday coming, we have a lot of important data for the UK market. There is an expectation for no increase on the current rate. It's set at 1.75%, expected to remain at 1.75%. And again, we are not aware of any change. Well, the outlook is less likely to see an interest rate hike. However, we don't want to really speculate. Anything could happen. So if you are trading any UK crosses on Thursday, the 1st of November, please be aware of the impending or the increased likelihood of volatility. Other than that, today we have quietish day. I mean, today we have the only one that's going to be this afternoon is for the US market, which is the US personal consumption expenditure core year-on-year stat, and that's they're not expecting any increase there, are they? 2% currently, and the forecast is to remain at 2%. Okay, so let's look back at the matrix. Now, the importance of the matrix is to obviously try and find out if there's any viable opportunities out there straight away by looking at a template that's more color driven. So ideally, we like to see constant colors throughout the time frames, and if we can get a clear indication of a clear trend still taking place and prices moving still very strongly within that trend, then ultimately we want to be sticking with those pairs. We do not want to be trading anything which is not in accordance. Stuff like the Australian New Zealand dollars all over the place. You can see there's no clear color, nothing really matches, so we rather like to stay away from those ones. Other ones, you can clearly see there is a divide. So you can clearly see there's a divide between the red and the blue in this case, from a long-term perspective to an intraday perspective, and these are the ones we clearly need to do some work on and to see if there's any clear support and resistance levels that are clearly taking place, and we need to then draw trendline alert indicators or apply a trendline alert for a breakout continuation of trend. So we're looking for continuations of trend in this case, and ideally we don't want to be trading anything that's going against the current long-term trend. Chief yen all over the place of here. You can clearly see that the MACD is not in alignment with the MA, which is the 200 period moving average. So there again, we need to be vigilant. But mostly there are a number of them here. There is clearly a divide between the long-term bias and the intraday bias. US dollar CAD looks good, so definitely look at that one. For any of you out there, the New Zealand CAD, we clearly see a divide here again. I'm going to do more of my analysis on the majors. So my analysis this morning is primarily for all those first-time traders who are using the Forex Made Ezee template. So let's have a look at those in closer detail. I'm just going to clean the chart quickly. There you go. So let's have a look at the euro against US dollar. It's always starting with a monthly time frame, and I've applied my FME template to this. So the Forex Made Ezee template is applied to this. And straight off the bat, I know for certain that over the years, price has been moving within a constellation, or within a range, a negative range that is, a channel. Price has not been able to make new highs over the years, and you can see here through the last couple of years, through 2015, 2016, and the start of 2017, we saw a very strong support mechanism being formed, and price reverted to the upside really aggressively throughout 2017. And we had this correction up towards the prior support and resistance level, which was the 200 period moving average. So before, over the years, price was trading above the 200 period moving average, which is a positive sign. Price has been trading below the 200 period moving average, which is here on the hard right edge in terms of the previous resistance factors. If you draw a line above those highs, you can see that the 200 plus this downtrend channel high is a very strong resistance area of price. So there again, we should be trading with heightened uncertainty because of that resistance. It would have been great if price had actually closed higher through February, March and April of this year to give us more of a genuine bias of continuation for euro strength against the dollar. However, that failed to materialize as the dollar got stronger and stronger, and the more uncertainty with Brexit and Italy came into the picture. We saw a clear resistance of price at a major support and resistance level in the shape of the 200-period moving average, but also a major support and resistance level of price action itself over the years. And subsequently, we saw a breakout and prices then reverted to the downside. Now you'll notice that if we're looking for continued selling sentiment in this case, because there's been nothing but weak selling pressure throughout 2018 so far, we need to be trading below or making new lows consistently. And you can see the last 5 months have been nothing but indecisive. A lot of wicks on the candles and very small bodies. So this is a sign that we need to remain vigilant, cautious, because price is now trading at a 50-period moving average, which is a support mechanism in this case, but also a long-term support and resistance level that price has failed to circumnavigate just recently. So we're now trading into a strong platform, support platform in this case, both on the 50-period moving average, but also this resistance level that's clearly been in play since, well, over the last 3 years, in fact. So essentially, if we are looking for continued euro negativity, because we come from a high point and we're driving low, we need to see price closing lower than the current support mechanism, which is the 50-period moving average, but also the support and resistance level where I've drawn that line, to give us a more favorable sign of continued selling bias underlying price. Therefore, it'll make the likelihood for that we can look for continued selling towards the low we've seen over 2015 and 2016 and 2017 respectively as a viable take profit level. At the moment now, there'd be just too much risk on the table because you're trading within a consolidative range, and we need to see a clear continuation candle of price. We cannot trade on the previous data that we got over the last couple of months, because that data is telling us that there's a lot of uncertainty, apprehension. Clearly, they're not willing to continue to sell. There's been a lot of selling, don't get me wrong, but there's been a lot of profit taking within those months. So there's clearly apprehension of sellers continue to leave their contracts open short. So that's a concern. Okay, so clearly we don't want to be trying to sell something when people are very uncertain of actually holding their contract low. So there again, far better to wait for price to close below that to give us a decisive continuation, say, yes, we are clearly wanting to continue to sell, therefore it kind of limits the amount of risk and heightens our probability, and we do have a viable target level, which is from the 50-period moving average to those levels below, roughly 800, just short of 900 pips. So there's more than enough capital on the table for time invested if we do get that continuation. So here again, I would be looking at the euro against US dollar for the last couple of days of this month, but certainly going into the new month. We then have non-farm payroll, etc. for this, which is important dollar data, but we also have the continued uncertainty with Italy, which is a negative aspect. We also have the uncertainty with Brexit, which is also a negative aspect for the euro, which is going to play its part. So there again, continued uncertainty both in the Italians and the Brexit side of everything, and the continued strength that we're seeing in the dollar currently will then help move or project a continuation of selling sentiment. There again, we still don't want to speculate. We still want to see a genuine close of that before we can take any viable options. So this week, I'm looking for continued selling. So what I'm going to do is just take my line and just draw it on the 50-period moving average, because this week, when I drop down to the weekly time frame, I want to see price continue to remain below that level and to close below that level. So if I drop down now to the weekly, let's look at the indicators. You'll notice that price is trading between the moving averages, which is not conducive of trend trading. It's more of a consolidation range. Clearly, we are range bound at the moment now. We are trading below the 50-period moving average, which is a negative sign. We have come from a high point here at the start of the year, and we've been dropping low. We need to see price closing below the 200-period moving average to give us a more decisive continuation aspect. My indicators, the RSI is below the 50% level, but you'll notice here, as price has been testing the same level over the last couple of weeks, you'll see that the RSI has clearly converged, which is a sign that there's weakness in the selling pressure that we're seeing at the moment now. There again, another sign that we just need to back off. We need to stand aside and wait for a clearer picture. MACD, you can see through this, momentum has clearly been all over the place. We've seen a swap and change just recently with the fast line above the slow line. However, the fast line is now back below the slow line. Histograms are back below the midline. These are all signs of negativity, which is good because we're looking for continued selling in this case. We want to see continued negative momentum, which is the MACD. However, we still don't have that closed low, which is important. Got to see that closed low than the current level to give us a more decisive continuation. Very, very important. We saw a breakout here at the end of last year. This candle in particular, last bearish break lower than the 200 period moving average, but you'll notice that the RSI was still above the 50% level, which is still a sign of positiveness. Okay, here we are below it, but we need to see it drive low. It needs to be driving lower than the previous low point to tell us that the relative strength of price is gaining selling strength, momentum, not weakening. That's not what we want to see. So here again, I would essentially look for price to close below this 200 period moving average to give me a more decisive indication of continued selling. So that's what I'm going to do. I'm going to move my line down to that level and apply trend line alert signal for a break and close lower than this level to give me a genuine, decisive indication that I can then look for continued selling for the start of a new month.